Imagine a city where cars just drive themselves, effortlessly picking you up, and that whole nightmare of finding parking. Just gone. A distant memory.
Sounds like science fiction, doesn't it?
It really does.
Yeah.
But what if I told you that future is, well, much closer than you might think, and it's already stirring up massive investment and, frankly, some incredible challenges? Welcome to the Deep Dive. Today, we're plunging headfirst into the robotaxi revolution. We're going to unpack a pretty detailed investment analysis, looking at the huge potential, the critical hurdles, and, what's really driving this massive shift in transportation.
Is it inevitable? Or maybe just a niche thing?
Exactly. Is this the future or just a future?
That's the core question, really. Because this deep dive, it isn't just about some fancy new cars.
Right.
It's about fundamentally reshaping our cities, our economies, and even how we think about getting around.
Yep.
The implications go way beyond just a ride from A to B.
Yeah.
It could literally redefine urban life.
Okay, let's unpack this then before we get too far ahead. What exactly is a robotaxi? What are we talking about here?
So at its heart, a robotaxi is an autonomous vehicle, an AV. But it's engineered specifically for on-demand ride-hailing. Think Uber or Lyft, but crucially, without a human driver behind the wheel.
No driver. That's the key.
That's the key, and they're almost always electric. Plus, they're absolutely packed with sophisticated sensors, things like LiDAR, radar, really advanced cameras, all of it run by cutting-edge AI and machine learning.
So definitely not just adaptive cruise control we're talking about.
Oh, far, far from it. The tech capabilities are incredibly advanced. These systems are processing just vast amounts of sensor data constantly, in real time.
To do what exactly?
Well, to spot obstacles, obviously, but also to build these super detailed maps of everything around them, track all sorts of objects, pedestrians, cyclists, other cars, and then dynamically adjust speed, direction, route.
Wow.
And here's the really impressive part. They're designed to learn, continuously updating their understanding of the world so they can operate with minimal or eventually zero human input.
Okay, here's where it gets really interesting for me. When we talk autonomy, people throw around these levels, the SAE levels, right? Society of Automotive Engineers.
That's right, the industry standards.
And for robotaxis, we're mainly looking at level 4 and level 5.
Exactly. Level 4 is high driving automation. The vehicle can handle most situations itself within a defined area, like a city center. It can intervene autonomously. A human driver might still be present, maybe needed for edge cases or outside that zone, but generally it drives itself.
Okay, so mostly autonomous, but with caveats.
Right. Then you have level 5, full driving automation. That's the holy grail.
No limits.
Pretty much. No human attention needed at all. No steering wheel, no pedals even. It's not restricted by geofencing. It can supposedly go anywhere a human could drive.
And hitting that level 4, or especially level 5, for commercial service without supervision, that's a huge deal for these companies.
Oh, absolutely massive.
Yeah.
Especially for investors. Achieving that unsupervised commercial operation, that's the critical inflection point. It signals real market readiness, boosts valuations, defines who's leading the pack.
What's fascinating here, though, is that not everyone's taking the same path to get there, technologically speaking.
Yeah, definitely not. There's a real strategic divergence. You've got companies like AutoX out in California, Zoox, which is owned by Amazon, and Pony.ai, who are big in China. They mostly use multi-sensor systems.
Okay.
Meaning they integrate LiDAR, radar, and cameras. It's a layered approach, redundancy. Each sensor type has strengths and weaknesses.
Okay, makes sense. But then there's Tesla.
Then there's Tesla, a very distinct strategy. They are relying solely on cameras, an 8-camera vision-based system. They explicitly decided not to use LiDAR or radar.
Which is like a huge gamble. I mean, if that vision-only system works just as well and is as safe.
They get a massive cost advantage, huge. And they could potentially scale up deployment much faster using their existing fleet.
But the if is enormous, right? What if it struggles? Bad weather, complex city streets, weird edge cases nobody predicted.
Then they risk serious regulatory problems, more accidents, and a big hit to public trust. It's a major risk.
Yeah.
That vision-only validation at scale is probably the critical technical point investors are watching for Tesla right now.
Okay. But whichever tech wins out, the promise of robotaxis transforming cities, that seems pretty universal.
Oh, definitely. The potential is immense.
So let's talk about that. What does this actually mean for us? For passengers, for people living in cities? What are the tangible benefits?
Well, the biggest one, potentially, is enhanced road safety.
How so?
By largely taking human error out of the equation. And human error, believe it or not, is behind the vast majority of crashes.
Really? That high?
Yeah. Waymo, for instance, they've shared internal data suggesting their systems could lead to dramatic reductions, like 85% to 96% fewer crashes and injuries in certain scenarios compared to human drivers.
85 to 96%. That's
Yeah,
incredible.
it is. Some projections estimate overall auto accident rates could drop by over 80%. Globally, that could mean preventing millions of deaths by, say, 2035.
Wow. Okay, safety is huge. What else?
Environmental sustainability is another big one. Since most robotaxis are electric, you're looking at a substantial drop in urban air pollution, lower carbon emissions, helps meet climate goals.
Yeah. Makes sense. Less smog, cleaner air in cities.
And then there's congestion, the dreaded traffic jam.
Ah, yes. Can they
Yeah.
fix that?
Well, they can certainly help alleviate it. They can optimize routes better, react to traffic changes instantly, coordinate with each other, and really encourage shared rides. Fewer cars needed overall, potentially smoother traffic flow.
Less time stuck staring at taillights. I like the sound of that.
Me too.
Yeah.
And beyond that, think about the societal impacts, especially increased accessibility.
Meaning for people who can't drive now.
Exactly. People with disabilities, the elderly, even younger people without licenses. Robotaxis could offer them transformative mobility, real independence, freedom of movement they might not have today.
That's genuinely liberating for a lot of people.
It really could be. And, on the flip side of that, think about personal car ownership.
You mean we might not need to own cars anymore?
In dense cities? Maybe not. If robotaxi rides become super cost-effective, some analysts project costs as low as, like, 25 cents per mile.
25 cents a mile. That's cheaper than owning a car for sure.
Way cheaper, especially when you factor in insurance, maintenance, fuel, and parking. If you don't need to park and rides are that cheap and available on demand, why own a car?
It could completely disrupt the auto industry, shift everything towards fleets.
Precisely. No more car payments, no insurance hassle, no hunting for that elusive parking spot. It's a fundamental shift.
That is a profound change to picture. Okay, so we've got the tech, the huge promise. Now let's zoom out. Who's actually doing this now? Who has robotaxis on the road, and what are the big market forecasts saying? Because I feel like I hear wild numbers.
Yeah, let's look at the current state of play. In the U.S., Waymo Alphabet's subsidiary is definitely a major force. They were the first to launch a fully driverless service back in 2020.
Right, in Phoenix first.
Phoenix, yeah. Now they offer paid autonomous rides in San Francisco, L.A., Austin too, and they're planning to expand into Atlanta and Miami.
Are people actually using them? What do the numbers look like?
Oh yeah, the uptake is impressive. By early 2025, Waymo announced they'd passed 10 million total rides.
10 million.
Wow. And get this. That represents something like 500% growth since just August 2023. They're averaging over 200,000 rides each week.
Whoa. That's not just testing anymore. That sounds like a real business.
It suggests they've hit a critical point in operational efficiency, proving commercial viability may be faster than people expected, which, could de-risk the whole sector for investors. They have about 1,500 vehicles now, planning for 2,000 more by 2026.
Okay. Waymo's a big player. Then there's Tesla, obviously.
Right. Tesla.
Right.
Elon Musk. They officially launched their robotaxi service in Austin, Texas. That was June 22nd, 2025.
Just recently, then. How did that start?
Pretty small initial fleet, maybe 10 to 40 Model Ys, and a flat fee, interestingly. $4.20 per ride.
$4.20. Okay.
But here's the important bit. That initial rollout was invitation only, and crucially, it included a human safety monitor in the front passenger seat.
Ah, so not quite fully driverless for the commercial launch, though?
Exactly, which has led to some scrutiny about their fully driverless claims for the commercial service, at least at the start. Their goal is to scale up fast and often, aiming for 1,000 vehicles by the end of 2025.
Got it. Who else is making moves?
Well, there's Zoox, Amazon's company. They have those distinctive sort of pill-shaped bidirectional vehicles. Been testing in California and Nevada since 2023, and they just opened a new factory designed to churn out 10,000 robotaxis a year.
10,000 a year? That's serious scale.
It is. They expect to start taking customers in Las Vegas this year, and then if you look over to China,
Big things happening there, too, I hear.
it's huge. Pony.ai and WeRide are really pushing ahead. They're moving beyond just testing into commercial services that are actually generating revenue now. Pony.ai is rolling out its latest Gen 7 robotaxis in Shenzhen, aiming for over 1,000 units, and they've partnered with Tencent.
In WeRide?
WeRide is actually listed on the NASDAQ now. They reported Q1 2025 robotaxi revenue of about $10 million US. That's a significant jump.
Okay, so Waymo, Tesla, Zoox, the Chinese players. Anyone else notable? What about Cruise?
Cruise. General Motors venture. They have that major setback, suspended operations after an incident in San Francisco, but they recently partnered with Uber, which could be their way back in. And we should mention Argo AI, backed by Ford and VW. They actually shut down in 2022. Shows how tough this space is.
Definitely a high-stakes game. Okay, now onto those market size projections. You mentioned caution is needed.
Absolutely. The forecasts are, well, they're all over the map, which really highlights how much uncertainty there still is.
Give me some examples. What are the bulls saying?
Okay, Goldman Sachs, looking at China specifically, projects just explosive growth from maybe $54 million in 2025 to get this, $47 billion by 2035.
47 billion from 54 million.
Yeah, it's like 757 times increase, a 96% compound annual growth rate. It's astronomical. They see the fleet in China growing from about 4,000 vehicles to nearly 2 million by 2035, achieving 25% penetration of shared mobility.
Mind-boggling numbers. What about globally?
ID TechX, a research firm, sees the global robotaxi vehicle market reaching about US $174 billion in 2045. That's a 37% CAGR over 20 years. Still very strong growth.
But you mentioned caution. What's the other side of the coin?
Right. You have firms like S&P Global Mobility with a much more sober outlook. They predict widespread adoption is at least a decade away, and they think robotaxis will account for fewer than 800,000 vehicles sold globally in 2035.
Wow, less than 800,000 versus Goldman seeing nearly 2 million just in China? That's a huge difference.
It's massive, and it really underscores that these aren't just number crunching exercises.
What do you mean?
I mean, these projections reflect fundamentally different assumptions about how quickly the tech will mature, yes, but also about how regulators will react, how fast the public will accept these things, how the economics will really play out.
So it's less about predicting the tech and more about predicting society.
In many ways, yes. It's about societal readiness, political will, public trust. Those soft factors could be just as important as the engineering breakthroughs.
Interesting. What about the broader market beyond just the cars themselves, like mobility as a service?
The mass market. Some forecasts there are truly staggering, potentially exceeding $10 trillion in gross sales globally by the early 2030s.
10 trillion, with a T.
With a T. And for the U.S. mass market alone, maybe over $700 billion in sales by 2030, which is roughly 30 times the size of the entire U.S. taxi industry today.
Okay. The potential is clearly immense, even with the uncertainty. But we know it's not all smooth sailing. It can't be. What are the biggest bumps in the road, the major hurdles holding this back right now?
Well, probably the biggest, most complex one is navigating the regulatory landscape and the related issue of legal liability.
So
It's just a mess. Companies face this incredibly complex patchwork of laws. Federal rules, state rules, even city ordinances, and they vary wildly.
like you mentioned, California versus Texas.
Exactly. California's got very strict AV regulations. Texas was seen as more AV friendly, kind of laissez-faire initially, but now they're bringing in new, tougher requirements starting January 2026. Things like a mandatory 3-year public road test with a human operator before any company can run unsupervised robotaxis there.
3 years of testing with a human first. That slows things down considerably.
Hugely. And at the federal level in the U.S., the main agency, NHTSA, National Highway Traffic Safety Administration, they oversee vehicle safety, but they still don't have comprehensive specific regulations for autonomous vehicles. It creates this legal gray area, lots of uncertainty.
And the liability question, if a robotaxi crashes, who pays? Who's responsible?
That's the multi-trillion-dollar question, isn't it? Is it the owner of the vehicle? The manufacturer? The company that wrote the software? Texas law, for instance, says the AV owner is responsible for following traffic laws. But then you have manufacturers, like Tesla, consistently denying liability for crashes involving their systems, like autopilot or FSD, arguing the human driver is ultimately responsible.
Even if the system was engaged.
Even then, you could see how this is heading towards some major legal battles. It's very murky.
Okay, regulation and liability, huge hurdles. What else? Public perception must be a big one.
Oh, absolutely. Despite that promise of drastically fewer accidents and fatalities, public skepticism is still really high.
You hear about crashes, right? Even if they're rare statistically.
Exactly. Those high-profile incidents stick in people's minds,
Yeah.
like the GM Cruise incident in San Francisco that led to them suspending operations, or reports of crashes involving Tesla's full self-driving beta. Every single incident like that, it just fuels public concern.
And probably makes regulators more cautious, too.
Definitely. leads to calls for stricter testing, delayed approvals. It feels like trust is fragile and easily damaged.
So it's not just about proving the tech works.
No, it's about building trust. Trust in the safety, trust in the responsibility if something does go wrong. Surveys consistently show people are concerned about riding in self-driving cars. They worry about data privacy. They question if AVs can really handle complex situations as well as a human.
Are attitudes different in different places?
Yes, interestingly. You see regional variations, like nearly half of people in Hong Kong said they were willing to try them. But in some mainland Chinese cities like Shenzhen and Wuhan, it was over 90% willingness.
Wow, big difference.
And things like Tesla launching in Austin with that human safety monitor.
Yeah.
That plays into perception too. It raises questions for the public. Is it really driverless yet? It impacts confidence.
Okay, regulations, perception. Then there's just the sheer cost, right?
Yeah.
This stuff must be incredibly expensive.
Astronomical. The R&D is immense, developing and constantly refining the software, the AI building, and maintaining those incredibly detailed high-resolution maps. Processing all that sensor data. It's a huge ongoing capital investment, a real logistically heavy lift, as they say.
And the hardware itself, those sensors aren't cheap, I assume.
No. Especially things like high-end LiDAR units, the advanced cameras, the computing platforms inside the vehicles. They add significant cost to each car.
Yeah.
But you mentioned a hidden cost earlier?
Yeah, the infrastructure, specifically charging, if these are electric fleets running constantly.
Exactly. Think about it. A robotaxi needs to operate maybe 18, 20 hours a day to be profitable. They're electric, so they need recharging frequently. Maybe 3 times a day to cover 450 to 750 miles.
Okay.
Now scale that. A fleet of, say, 10,000 robotaxis in one city, that could mean 30,000 charging sessions every single day.
30,000, how do you even manage that?
That's the challenge. You either need a massive human workforce, maybe 450 people just plugging and unplugging cars, managing the logistics, which eats into your cost savings from not having drivers, or you need expensive, sophisticated robotic charging systems. To make the whole operation truly automated, you need robotic charging to close the automation loop. Otherwise, the human labor for charging becomes a huge operational cost and bottleneck.
Wow, I hadn't fully grasped that scale of the charging challenge. It's not just about having enough plugs.
Not at all. It's a massive operational hurdle. Plus, remember the reliance on those hyper-accurate, constantly updated high-res maps. That's another significant ongoing infrastructure cost and complexity.
And this brings us back in a way to the tech limitations, especially that vision-only versus multi-sensor debate again.
Right. Concerns linger about how well a camera-only system like Tesla's will perform reliably in really challenging conditions, heavy rain, snow, fog, direct sun glare, or how it handles totally unpredictable edge cases, things the AI hasn't seen before.
Whereas LiDAR and radar offer different kinds of data.
Exactly. They offer complementary data that isn't affected by light conditions in the same way. LiDAR can see shape and distance precisely. Radar penetrates fog and rain. The argument is that combining sensors provides crucial redundancy and robustness, especially for those tricky edge cases. The environment itself is just a massive variable to handle.
Okay. So given all these challenges, the regulations, the public trust, the costs, the tech debates, how are the main players actually navigating this? What are their distinct strategies in this really intense race? Are they all just trying to solve the same problems the same way?
No, not at all. The competitive intensity is definitely high, but the strategies differ significantly. There's that clear strategic divide we touched on.
Let's revisit Waymo first, Alphabet's company.
Right, Waymo. They're positioned as, the dominant force in the U.S. right now, the first mover who launched commercially back in 2020. Their approach uses the full suite. LiDAR, cameras, radar, all integrated with their advanced AI. They're operating at level 4, offering truly driverless rides within their service areas.
And their strategy seems to be about deep validation.
Exactly. You could call it a perfect before-scale strategy. They emphasize safety, meticulous testing, accumulating vast amounts of data, over 20 million real-world autonomous miles driven, plus over 1 billion miles run in simulation. That built a really robust foundation for their AI.
Okay, so methodical, data-driven, safety-focused. What about Tesla's playbook? It feels different.
Very different. Tesla, with their recent Austin launch, their unique angle is trying to upgrade their existing huge fleet, over 4 million vehicles out there, with autopilot hardware to full autonomy via software updates.
Leveraging the cars already sold.
Precisely. And their key differentiator technologically is that 8-camera, vision-only system, no LiDAR. They argue this dramatically cuts hardware costs. But critically, as we said, their current full self-driving system is still considered level 2 autonomy. It requires active driver supervision.
So their strategy feels more like,
More like a move fast and break things approach, perhaps. Aiming for rapid deployment, iterating quickly based on real-world data from their huge fleet, betting that vision only will eventually be solved and give them a massive advantage.
two very different philosophies.
Absolutely. And then you have the other key players. Pony.ai and WeRide really leading the charge in China, deploying commercially. Pony.ai looks set to grab significant market share there. WeRide is already publicly traded, showing revenue.
And Zoox, Amazon's bet.
Zoox is interesting with their unique, purpose-built, bidirectional vehicle. No front or back, really. And that new factory, capable of 10,000 units a year, signals serious intent to scale.
So summing up the strategies, it seems like a fundamental split.
Yeah, I think that's fair to say. You have Waymo, maybe Baidu and China too, taking more cautious, technologically layered approaches. It might mean slower initial scaling, potentially delaying market dominance, but it likely reduces technical and safety risks.
Versus Tesla.
Versus Tesla, taking the high-risk, potentially high-reward path, betting big on vision only. If they pull it off, they could leapfrog everyone with scale and cost. But they face significant risks. Regulatory backlash, safety incidents, proving the tech works in all conditions if it doesn't pan out as hoped. It really is a high-stakes gamble.
It really is. The chips are definitely enormous in this game.
Absolutely.
Well, this has been fascinating. It's crystal clear the robotaxi sector is definitely a high-risk, high-reward proposition. The potential for just profound disruption to how we get around, driven by lower costs, environmental pluses, huge safety improvements, it's undeniable.
Right. That cost advantage alone could truly democratize mobility in ways we haven't seen before, changing how we live, work, and plan our cities.
And yet, those hurdles are significant, as we've really unpacked. The messy, evolving regulations, the critical need to build and maintain public trust, especially when incidents happen, the sheer R&D and operational costs like that massive charging infrastructure challenge, and the ongoing technical debates like vision versus multi-sensor.
Exactly.
Yeah.
At the end of the day, ultimate success is going to come down to which companies can consistently prove their systems are safe, robustly safe. They need to navigate the regulations successfully, achieve that clarity, and they have to execute incredibly efficient, scalable operations that really manage the total cost of ownership.
It's not just about the tech, then.
No, it's a convergence. The winners will likely be those who master the interplay of advanced AI, sophisticated software development, and nitty-gritty operational excellence, delivering mobility that's not just autonomous, but truly reliable and cost-effective.
So as robotaxis start to redefine our roads, maybe even our cities, here's a final thought for you, our listener. What aspect of this revolution really stands out most to you? Is it the potential shift away from owning a car, or maybe the complex ethical questions around AI making driving decisions? And how do you see your city adapting to, or maybe even resisting, this profound transformation?
Lots to think about.
Definitely. Thank you for joining us on this deep dive.